Florida's housing boom is officially over. After years of explosive growth, skyrocketing prices, and homes selling in days, the Sunshine State is facing its first real market correction since the pandemic. Prices are falling, inventory is surging, and homes that once sparked bidding wars now sit for months with desperate price cuts. According to Redfin data, the median home price in Florida dropped 0.39% year-over-year in October 2025, landing at $408,700. But that modest decline masks a far more dramatic shift happening beneath the surface. Homes are now taking 83 days to sell, up 13 days from last year. Only 9.2% of homes are selling above asking price, down nearly a full point. And nearly 29% of listings are getting price cuts, up almost 5 points year-over-year. The frenzy is gone. The desperation has flipped from buyers to sellers. And if you're thinking about buying or selling in Florida right now, understanding these shifts could save you tens of thousands of dollars or protect you from a costly mistake. Subscribe to Housing Intel for weekly data-driven real estate intelligence you won't find anywhere else. The price plateau nobody saw coming. For 5 straight years, Florida's housing market defied gravity. From 2020 to late 2023, median home prices rocketed from roughly $300,000 to over $430,000. A staggering 40+% surge fueled by remote work migration, rock-bottom interest rates, and an insatiable appetite for sunshine and no state income tax. The chart tells the story clearly. A steep, relentless climb that seemed unstoppable. But starting in mid-2023, something changed. Prices flatlined. That sharp upward trajectory turned into a stubborn plateau, hovering around $410,000. And now, in 2025, we're seeing the first sustained year-over-year decline. It's modest, yes, just 0.39%. But in a market that only knew one direction for half a decade, any decline signals a fundamental shift. Buyers who stretched their budgets assuming perpetual appreciation are now underwater or stuck. Sellers who waited for one more price surge are watching their equity evaporate as competition floods the market. This isn't a cliff. It's a slow bleed. And in real estate, slow bleeds often hurt more because sellers refuse to accept reality until it's too late. Sales volume tells a different story. While prices have stalled, the number of homes sold in October 2025 actually rose 8.9% year-over-year, reaching 29,126 transactions. That might sound like strength, but look closer at the 5-year sales chart, and a darker pattern emerges. Monthly sales volumes have been collapsing since the peak of the pandemic boom. In early 2021, Florida was moving over 50,000 homes per month. By late 2022, that figure had cratered to the low 30s. The current 29,000 is a modest uptick from the lows of late 2024, when volumes dipped into the mid-20s. But this isn't a recovery. It's stabilization at dramatically suppressed levels. The 8.9% year-over-year increase is simply comparing against an incredibly weak baseline. Fewer transactions mean less liquidity. Less liquidity means price discovery gets harder. And when prices are artificially supported by low volume, corrections tend to be sharper once reality sets in. Florida's sales volume isn't recovering. It's just limping along, supported by sellers finally capitulating on price and buyers cautiously stepping in at perceived discounts. The inventory explosion reshaping the market. Here's where Florida's correction becomes undeniable. In October 2025, there were 209,069 homes for sale across the state, up 4.1% year-over-year. That might not sound dramatic until you zoom out. 5 years ago, in 2020 and 2021, Florida's active inventory sat around 150,000 homes or less. The market was starved for supply. Buyers fought over scraps. Sellers had all the power. Fast forward to today, and inventory has surged by nearly 40% since the pandemic lows. The 5-year inventory chart shows a relentless climb starting in mid-2022, accelerating through 2023 and 2024, and plateauing at elevated levels in 2025. Even more telling, newly listed homes jumped 9.6% year-over-year to 42,938 in October. Sellers are flooding the market, either cashing out before further declines or finally giving up on waiting for the perfect price. And this inventory surge isn't being absorbed. It's accumulating. When supply grows faster than demand, prices have only one direction to go. Florida's inventory explosion is the single biggest red flag in this market. It signals oversupply, weakening demand, and seller desperation all at once. Months of supply reaching equilibrium. The months of supply metric, which measures how long it would take to sell all active inventory at the current sales pace, now sits at 6 months in Florida. That's unchanged year over year, but context matters. 6 months of supply is considered a balanced market, the sweet spot where neither buyers nor sellers have overwhelming leverage. But Florida hasn't seen balance in years. During the pandemic boom, months of supply dropped below 2, creating a hyper-competitive seller's market where homes sold in days, and bidding wars were the norm. The 5-year chart shows months of supply bottoming out in 2021 and early 2022, hovering around 1 to 2 months. Then came the surge. By late 2023, supply had climbed to 4 months. By mid-2024, it hit 5. And now, at 6 months, Florida has officially transitioned from a seller's market to a balanced market. But here's the catch. This balance is fragile. Inventory is still rising, sales volume remains suppressed, and affordability is worse than ever with mortgage rates still elevated. If months of supply pushes above 6 and into the 7 to 8 range, Florida will tip into a buyer's market, and that's when price declines accelerate. We're on the edge right now, and sellers who don't adjust quickly will be the ones left holding the bag. Competitiveness is collapsing across the board. Nothing captures Florida's market shift more clearly than the competitiveness metrics. Only 9.2% of homes sold above list price in October 2025, down 0.82 percentage points year over year. 3 years ago, that figure was pushing 15 to 17%. Bidding wars were standard. Buyers waived inspections and offered tens of thousands over asking just to secure a property. Today, fewer than 1 in 10 homes command that kind of urgency. The 3-year chart shows a steady, relentless decline in above-list sales, dropping from the mid-teens in 2023 to single digits by late 2025. Meanwhile, homes with price drops have surged to 28.8%, up 4.9 percentage points year over year. Nearly 3 in 10 Florida listings are now getting marked down, a desperation move that signals sellers overpriced initially or market conditions shifted beneath them. The price drop chart shows the percentage climbing steadily since early 2024, accelerating through 2025. And the sale-to-list price ratio, which measures how close final sale prices are to original asking prices, has fallen to 96.2%, down 0.44 points year over year. That might sound minor, but it reflects weakening buyer conviction and growing negotiating power. The 3-year chart shows sale-to-list ratios eroding from near 100% in 2023 to the mid-90s now. Sellers are getting less than they ask for, and buyers are demanding concessions. This is not a seller's market anymore. It's not even balanced. It's tipping toward buyers, and that shift is accelerating. Days on market climbing to unsustainable levels. Homes in Florida now sit on the market for a median of 83 days before selling, up 13 days year over year. That's nearly 3 months of carrying costs, mortgage payments, insurance premiums, and anxiety for sellers. 5 years ago, during the peak frenzy, homes were selling in under 30 days. The 5-year chart shows days on market bottoming out in 2021 and early 2022, hovering in the low 20s to 30s. Then came the spike. By late 2023, days on market had climbed to the 50s. By mid-2024, it hit the 70s. And now, at 83, it's the longest market time Florida has seen since before the pandemic. Longer days on market signal weak demand, poor pricing, or both. It forces sellers into price reductions, concessions, and desperation. It gives buyers time to nitpick, renegotiate, and walk away. And it creates a psychological spiral. The longer a home sits, the more buyers assume something is wrong with it, which makes it sit even longer. Florida's days on market are climbing into dangerous territory. And unless demand picks up dramatically, which seems unlikely with affordability at crisis levels, this metric will keep rising, dragging prices down with it. Pockets of growth masking broader weakness. Not every Florida market is struggling. According to Redfin, 10 metros are still seeing rapid price growth, defying the statewide slowdown. Lauderhill leads the pack with a staggering 52.5% price increase, followed by Englewood at 45.4% and Boca Raton at 25%. Fort Pierce, Destin, Marco Island, Bayonet Point, Oakleaf Plantation, Pensacola, and East Lake round out the top 10, all posting double-digit gains. But here's the reality. These are outliers, not indicators of statewide health. Many of these metros are smaller markets where a handful of high-end sales can skew median prices dramatically. Others, like Boca Raton and Marco Island, are ultra-luxury coastal enclaves insulated from affordability concerns because their buyers are cash-heavy and less rate-sensitive. Lauderhill and Englewood are seeing growth driven by spillover demand from more expensive nearby markets. But that demand is fragile and could reverse quickly if the broader correction deepens. These pockets of growth are real, but they're not sustainable if the rest of Florida continues to weaken. When the tide goes out, even the strongest markets get pulled down. Buyers chasing these hot spots need to ask themselves, am I buying into genuine long-term value, or am I the last fool rushing into a market that's about to correct? What this means for buyers and sellers right now. If you're a buyer in Florida, this is the first real opportunity you've had in 5 years. Inventory is abundant, competition is fading, and sellers are getting desperate. You can negotiate. You can demand inspections. You can walk away if the deal doesn't feel right. Don't rush. Don't stretch your budget. And don't assume prices will rebound quickly. This correction is just beginning, and patience will likely be rewarded with even better deals in the coming months. If you're a seller, the window is closing fast. 6 months of supply, 83 days on market, and nearly 30% of listings taking price cuts means you're no longer in control. Price aggressively from day one. Don't chase the market down with slow, incremental reductions. And if you don't need to sell right now, consider waiting until rates drop and demand returns. Selling into this market means accepting reality, not your fantasy price from 2 years ago. If you're an investor, Florida still offers long-term value, but short-term pain is likely. Rental demand remains strong in many markets, but cap rates are compressed and insurance costs are exploding. Buy for cash flow, not appreciation. and focus on markets with genuine economic growth, not just pandemic spillover hype. The bottom line on Florida's housing market. Florida's housing boom is over. The data doesn't lie. Prices are falling, inventory is surging, competition is collapsing, and homes are sitting on the market longer than they have in years. This isn't a crash, not yet anyway, but it's a correction, and corrections can last for years. The markets that exploded the fastest during the pandemic are now the most vulnerable to prolonged weakness. The affordability crisis, driven by high prices, elevated mortgage rates, and skyrocketing insurance costs, isn't going away anytime soon. And until demand returns in a meaningful way, this market will continue to rebalance in favor of buyers. If this breakdown gave you a clearer picture of where Florida's housing market stands right now, smash that like button. Subscribe to Housing Intel and hit the bell for real-time market intelligence that cuts through the hype. And drop a comment below. Are you buying, selling, or waiting out this market? We read every single one. Stay informed, stay ahead, and we'll see you in the next video, where we dive even deeper into the markets shaping America's real estate future.